Hi everyone, thank you for being here. My name's James Van Straten, I'm the Senior Analyst at CoinDesk. And here with me is Kyle, Clayton and Seamus. Do you guys want to go just down the line and say what you guys do to kick it off?
Sure. Hi everybody, I'm Kyle. I'm the Executive Director for Stacks Asia. For those not familiar with Stacks, we are one of the original Bitcoin layers that help to bring programmability and smart contracts to Bitcoin, and the idea of building on Bitcoin and applications being able to leverage that stability and security of the L1, and today focus heavily on unlocking Bitcoin capital and the $2+ trillion that we're all working together on.
Hi, I'm Clayton. I'm the head of BD at Babylon. Babylon is a Bitcoin staking security and liquidity protocol. We built a native staking layer for Bitcoin that sits on the Bitcoin network. We have about 50,000 Bitcoin staked through our protocol today. And the ultimate goal of the broader ecosystem is to offer that as security for other protocols, and then also in turn have a representation of that stake position exist in other blockchain ecosystems.
I'm Seamus Rocca, CEO of Xapo Bank. We've been around since 2013, started off as a Bitcoin wallet, and we transitioned into becoming a Bitcoin bank. So we've converged all the aspects of a VASP and all of the services that it provides on Bitcoin with a bank that we built specifically to allow us to innovate. We essentially give the same services that you would expect to have with a bank account with Bitcoin. So you can deposit them, keep it safe, you can transact, spend it with a card, savings, yield products, and borrow against it. And we'll do that both on the dollar side and on the Bitcoin side.
Thank you for that. So I just want to start off on quite a personal question, what Bitcoin means to you, and how it's living up to its full potential, or are we just getting started in 2025?
I think we're at a very unique point for Bitcoin. Looking at its history, not only was it birthed and given to us about 16, 17 years ago, but we've kind of gone through three major phases. We went through about a 12-year phase of watching the early foundations of Bitcoin being built. We saw the beginnings of NFTs, real-world assets, domain names, DeFi, and the like come to Bitcoin first, and then start to move over to other ecosystems. And during that time, we shifted into a very fun and very eye-opening era, which was the last 4 years. So from 2021 to 2024, where we begun to see this experimentation era for Bitcoin, where the realization of a required technical stack above the L1 started to come to life. It wasn't just about payments, it wasn't just about smart contracts, it was what else is necessary to make BTC an asset usable in so many different ways, other than just a store of value. But more importantly, how can we leverage the L1 with some of the technologies and integrations we'd seen in Ethereum, Solana, and other ecosystems as well. And now we've entered this very, very exciting era of really productivity and utility for Bitcoin. And for me, that's what Bitcoin has begun to mean for me, is at once it was a store of value as I had been educated on. Then very quickly I got to see and invest in so many of the early companies building on Bitcoin. What was possible from bridging to roll-ups to DeFi, marketplaces, e-commerce, AI, you name it. I got a chance to see it very early on, and even the beginnings of Bitcoin staking and restaking. And now we're entering this time where Bitcoin is finally productive. It has utility. It can be a productive asset and not something I just hold and watch go up and down in price volatility, but instead can actually produce a passive income in some respects, and can also be used in other applications as well. And so for me, Bitcoin is much more than it was maybe a few years ago as a store of value or just a stable L1, but today it's something that's a hardened security network that can be utilized, and then as an asset is something that has productivity. Clayton mentioned they have about 50,000, add in Core, who is about 14, Stacks, who has about 3,000. Together, we have almost 1.5 to 1.75% of Bitcoin's total market cap in productivity today. And that's happened and occurred since almost mid-summer last year, early August. So to see that come to life is pretty meaningful.
Yeah, I would agree. I mean, I think it's definitely gotten to the point of broader mainstream adoption as a store of value asset. I mean, anything that has a ticker on CNBC likely reached mainstream adoption. The interesting part about that, though, is like it's reverse compared to other assets that exist in the crypto space, right? Like you generally get adoption on these decentralized rails that you've been building over the past 10 years, and then someone starts to speak about putting into it like an ETF vehicle. But there's more USD value of Bitcoin sitting in ETFs than there is in all of DeFi, right? So like the addressable market for Bitcoin and getting that put to work on chain and making it something that's beyond just a store of value asset is really the next phase of what Bitcoin can be and its potential for the future.
Yeah, I think that's the key. We've clearly seen the evolution of something that was very much a store of value. We all saw the potential, something that can be an improvement on gold as a store of value, but it has more use cases. And if you think about the list of products that I rattled before that we allow our customers to do with Bitcoin, that's just a good example of things that simply you couldn't do 5 years ago. So there's been a very strong evolution on the product side of use cases and innovation of what you can do with Bitcoin. And in large part, that's also true because of all the entrants that have come to the market, all of the technology and innovation that happens within the people that have been working in crypto for a while, like people that I'm here on stage with, but also in terms of the fact that it's not an asset class that can be ignored anymore. If you look at the price of Bitcoin, the interest from institutional investors, the BlackRock ETF, I mean, those things, when I started in crypto in 2016, would have been unheard of, and now they're becoming the norm. So if you think about what the next 10 years looks like, it's very difficult not to be excited. Does that mean that we're not going to see more bumps along the road? I've worked in banking and finance for 30 years. There's always bumps along the road, and Bitcoin will be no different. But hopefully in the future, whenever there's a macroeconomic bump on the road, Bitcoin will be sort of not seen as the outlier. In the past, we saw the tariff issue not that long ago. A lot of asset prices went down, and people would go, "Oh, the price of Bitcoin's gone down to 70 something." Yeah, but so has everything else. The S&P went down to 5,000. So hopefully, at some point, Bitcoin is not bullied when there's a price dip. It's just seen as the ebbs and flows of any other asset class.
Thank you for that. So if I want to go back to you, Seamus, and then just to understand, so Xapo have been in the space since 2013, been Bitcoin only. So what were the major inflection points for you over the past 12 years? And then we're now seeing, can Bitcoin compete with the banks, or do you think it's more Bitcoin working with the banks? So is it a for or against kind of thing?
Yeah. So I think when we started, the price of Bitcoin was anywhere from $10 to $100. So as a result, it was very much almost like a mass market product. So therefore, you had to have easy access, on-ramps. How do you keep the coins safe? The main customer goal that we were trying to solve for is, how do I get my hands on Bitcoin and keep it safe? That still is really at the core of what we do today. What the major difference is the price of Bitcoin and the appreciation we've seen, with it being now at $103,000, $104,000. If you had 100 Bitcoin back then, which would have cost you a couple of $1,000s, you're now holding $10 million. And therefore, you have become, if you walked into a traditional bank today and said, I've got $10 million, you'd be automatically in this sort of wealth category private banking section of traditional finance. And I think what we found is that as the price has gone up, the needs and sophistication of our customers have gone up. And therefore, we've kind of evolved from being a platform that inflection point that you talked about is realizing that we couldn't be everything to everyone. And what we were going to focus on, early adopters and people that already have substantial amounts of Bitcoin, and how do we give them the best service possible? Because I see a fundamental difference between us being Bitcoin native since 2013 and JP Morgan waking up tomorrow deciding they're going to offer their customers Bitcoin.
No, thank you. So I want to ask Clayton, just in terms of Babylon. Could you just go through the whole process of staking, and then also, as you're in the US, the jurisdiction rules and everything with that?
On our staking protocol.
Sorry?
Can you repeat? Sorry.
Yeah, just tell the audience what Babylon is, how the staking process is working in the US as well, in terms of the clarity and regulation.
So the staking protocol is decentralized, right? So there's no sort of single entity that's managing this. So it's similar to ETH staking or Solana staking as opposed to DeFi staking. What we've built for Bitcoin holders is an experience that's similar to delegating an asset on a delegated proof of stake network. So we leverage UTXO transactions as well as Taproot, which provides a non-custodial solution for staking. We have that integrated with major custodians like HexTrust, BitGo, and Anchorage, as well as multiple different wallets. So there's no bridging or pegging of that asset. It's effectively locked within your wallet, and then you're pointing that asset to a validator, similar to any other proof of stake protocol. So what we like to say is we've created the third native use case for Bitcoin. One obviously being store of value, the second one being send and receive, and then the third being staking that can exist at the base layer of the Bitcoin network. But yeah, I mean, there's no single entity controlling it. So anyone, anywhere can effectively participate.
And then Carl, being in Asia, could you just tell us what Bitcoin adoption's like there? And also you're actually in multiple jurisdictions, so could you tell us the difference of what you're seeing currently going on now?
Yeah, I think firstly, kind of looking back for a second, 2024, to what Clayton and Seamus mentioned, some of the different data points we've all highlighted so far, 2024 will probably be that year that we all look back on as a pivotal year, or maybe the most pivotal year for Bitcoin to date. It was a year that everything began to come to fruition. It is the time where adoption started to take. It is the moment when the technology, the infrastructure, the institutions, the numbers, the metrics started to show actual traction as well. And it's also the time when countries and institutions began to shift policy on Bitcoin as an asset as well. When we look at Asia, for instance, a lot of the Bitcoin mining was originally in Asia. That was where a lot of the focus was. That shifted into where Bitcoin capital was. That was where a lot of the companies that were building additional Bitcoin layers started to be built and rise up. But more importantly, policy. You had countries like Hong Kong, Japan, Korea, Singapore very quickly start to shift their policies around crypto as a whole to then embracing Bitcoin for the first time. We also saw it in Thailand, we saw it in Vietnam. Japan and Korea are probably the two most prominent that may not get talked about much, but are maybe the most meaningful to Bitcoin as a whole. Korea completely did a 180 on their policy and went from a retail-only environment to opening up the ability for institutions to buy, sell, transact, and custody Bitcoin and other cryptocurrencies. That is a huge moment for South Korea and for the entire crypto industry. Second, Japan. Japan had been very closed off for many years around crypto, Bitcoin, and otherwise. And at the end of 2024 into this year, 2025, began to open up and re-embrace crypto, looking at reducing taxes, opening up the ability for institutions to take on the adoption of Bitcoin. You've got companies like Metaplanet and others within the country starting to take BTC on their books. I think just earlier this week, Metaplanet actually surpassed El Salvador for the amount of Bitcoin it holds on its balance sheet versus a country. You're seeing the same thing in the UAE. In Abu Dhabi, you have a rise of Bitcoin wealth coming to the area and also being added. You've got one of the sovereign wealth funds taking a large position in IBIT, and a lot of that also comes back to the US. The US earlier this year completely embraced crypto, kicked off its policy, opened its arms to the industry, and also started talking about what would happen if Bitcoin was in a reserve or on a balance sheet. Suddenly we go to over 80 different companies publicly traded globally that have Bitcoin as a reserve or a treasury asset. You've got more in Asia and the UAE starting to add, and now Europe as well to that. So you're seeing policy shift positively.
Yeah, I can actually talk firsthand. So I also advise a UK public company, Coincilium, on their Bitcoin treasury. And as you said, we're seeing multiple nations all start to adopt Bitcoin on their balance sheet. Metaplanet was the most successful company in 2024. I think they had accrued about 2,000% in shareholder return. And this has gone across in Hong Kong, the US. I think MicroStrategy are up 3,000% since their inception of their Bitcoin treasury strategy. And its trade volumes are increasing, its liquidity, and we're getting all kinds of questions now of why this is happening. And I think the interesting discussion is that it's actually putting eyeballs on all these balance sheets and all these companies, and it's something that's never really happened before. So it's great to see, and it's just kicking off all the questions now.
Well, and to a comment on that, we're now at a point where Bitcoin is now an asset that anybody, regardless of geography, regardless of financial or technical knowledge, can participate in. There is literally something for everyone, and any whom, whether it be an institution, a sovereign wealth fund, a government, a corporation, to participate in this asset class.
Yeah.
And now, thanks to a lot of the work that Babylon, Stacks, Core, and many others in the BTC-Fi or Bitcoin DeFi space, we've done the same thing around earning as well. So not only can you buy the asset core, not only can you actually enter into an ETF or an ETP product, you can also go into a number of different ways through DeFi, through tokenized or minted or wrapped assets. You can go into yield funds now built around Bitcoin. Exposure for Bitcoin is now available to everybody. And I think that's a big catalyst that we shifted into from last year to this year that changed the entire dynamic.
So what are the biggest roadblocks that you guys see on a day-to-day basis?
For me, it's mindshare and education, or mindset and education. Mindset that Bitcoin is a store of value and of digital gold only, or as some governments and institutions are realizing and referring to it as a sleepy asset, that it actually can have productivity, it can earn a yield, it's productive. And then I think the other is education, is that continuing to educate that Bitcoin is something that you can buy, you can hold, you can store, you can earn off of, but also you can build off of as well. And that's a big educational effort, whether it's from the Lightning side to Rootstock, Stacks, Core, Babylon, BitLayer, doesn't matter the protocol. That's something we all have to work towards continuously to educate on what these things are.
Mm-hmm. Yeah, I mean, it's educational for us as well. And depending on who you're talking to, we have a dual-sided marketplace, right? So obviously protocols are very, very interested in Bitcoin liquidity. Obviously people are very, very interested in a reward rate attached to a Bitcoin staking position. The good thing for us is, proof of stake has been taught to the broader industry for 5 years, right? So really it's just reworking that for Bitcoin. It's like, well, I was told I wasn't supposed to do anything with this forever, and now you're telling me that I can do something. And then depending on what protocol you're talking to, I think a lot of people are seeing it as a differentiator if they're like going to market, right? It's like, oh, we really want to work with y'all and we want to be this thing that's different, that becomes a Bitcoin-centric economy, that is a proof-of-stake ecosystem that has its own use cases beyond that. But we see this as the pristine store of value asset and collateral asset for DeFi. And if we don't have that, then we're not going to get to the next cycle of being something that's legitimate long-term. So regardless of like how you're looking at a protocol growing, right? You have this asymmetric speculation on this being like crazy, and maybe there's a bunch of meme coins on that, but eventually like a large sustainable layer 1 protocol wants to diversify away from that, at least for like at some capacity, and then that results in like bringing RWAs, stablecoins, and Bitcoin into the ecosystem. And I think everyone that's building these solutions around injecting that liquidity into those ecosystems are providing value to those.
For me, it's education as well, but with a different slant. So if you think about our focus is really bridging Bitcoin to traditional finance. Why? Because even though Bitcoin was created to be an alternative to the existing financial system, you can't really parachute into the future 50 years from now when that might well be true. So in the interim, you need that bridge to make sure that Bitcoin is something that's easy, simple to use. And if you think about 10 years ago, most of the people that were involved in the Bitcoin and crypto space were mostly technologists, right? Now, as we see the bridge to, thanks to traditional finance, Rails and what have you, and the simplicity of the platforms, you can make it a much sort of broader and appealing product for everybody. So that means that for us, we have no choice but to engage with traditional finance. And the amount of time that I spend educating people in the traditional finance space is significant. There's a lot of heavy lift there still to be done. The price of Bitcoin certainly helps, right? The interest is there, and almost every traditional finance company will have a team or people working at looking at the space. I saw S&P were here earlier. I had a chat to some of them. There's no way you would have seen S&P at a crypto conference 5 years ago, right? So that shows that there's progress. But I do think that there's still a lot of marketing on that traditional finance side and from some jurisdictions and regulators versus actual execution and traction. If I think about Singapore, Hong Kong, yes, they spoke about, well, we're a bit more crypto friendly. It was Switzerland back in the day. My experience, because I've worked with all those jurisdictions, is the government side would be very pro working with Bitcoin, and then when you got to the regulator, it was computer says no. And I think it's the same with traditional finance. Oh yeah, we want to be involved and understand crypto. We want to use the use cases. Okay, well, we can work with you. We've got a banking license. We are members of Visa and MasterCard. All the things you would expect a bank to have, we have. But yet somehow the moment you mentioned the word Bitcoin, it's very much still a very heavy lift to get in the door.
So just going back to you, Seamus, just so with the tariff uncertainty we're seeing, geopolitical uncertainty everywhere, and coming from the UK, we're seeing the most amount of millionaires leaving. Have you seen a pickup in demand for your services? Or what other events specifically where have you seen an influx of people coming in and using it?
Well, I think price action in Bitcoin is very relevant for us for a number of reasons. We built Xapo almost with the same tenets of Bitcoin itself, which is how do we make it as decentralized as possible so that it can't be interfered with by jurisdictions and governments or whatever, and how can we serve as many people as possible. So we kind of emulated the Swiss banking model, and we did it in Gibraltar because we found Switzerland not to be that Bitcoin friendly. Yeah. So they developed their DLT regime, so we did the sort of VASP regime license next to the bank in Gibraltar for that reason, and essentially it's an offshore bank account that you're opening up, even if you might be in Japan, Brazil, or whatever. So where you reside is irrelevant. As far as we're concerned, our customers are Bitcoiners, and their geography is kind of irrelevant. That's how we try to operate. But what we do see is, as the price of Bitcoin goes up, people ask themselves that tough question, which is, self-custody is well and good, but at what price is the risk too high, right? So we spend, on average, somewhere between $15 and $20 million a year on securing and custodying our customers' coins. Back in 2017-18, we were the largest custodian of Bitcoin on the planet. We had about 1 million coins in our bunkers before we sold the institutional business to Coinbase. So we know a thing or two about keeping coins safe. And that's really our trusted brand, And we see that people, as the price goes up, they start leading us a few Bitcoin, and as they love the product, they trust the brand, they understand what we do to keep them safe, we see an influx of more Bitcoin coming in because they realize that self-custody is well and good until you make a mistake, and you're putting your life savings at risk. When those life savings were $10,000 in 2015, it didn't matter. Through price appreciation, it's now a lot of money, and people are making that leap into saying, okay, I trust you guys with my coins because I don't trust myself as much as I trust what you can provide in terms of your infrastructure and your know-how.
So we're in 2025, let's say we get to the next halving in 2028, what does that look like for each of you? Not price prediction, just what that looks like.
So in 2028, so about 3 years from now, I think we have an exciting future ahead of us. I mean, right now, as I noted, we got about, we'll call it 1.5% of Bitcoin capital today currently productive in a number of different protocols and assets. I think as we start to look towards the next couple years ahead, we can definitely see us tip over 5% and hopefully even more. Get us to 10% of that $2 trillion that is being productive in DeFi, protocols, and also tokenized assets. That's something, again, we're very heavily focusing on at Stacks, but I'm watching across the entire space right now evolve. I think that we'll also see a very big opening around policy as well, that countries will continue to open up and embrace. You'll see many more sovereign wealth funds take Bitcoin onto their balance sheet, core Bitcoin, not just IBIT or other spot ETFs. And then also you'll start to see a rise of the Bitcoin standard companies at mass. Right now there's 80. I expect to see by that time triple digits, if not 4. Yeah. Thousands of companies taking that on as a potential asset class.
Yeah, in the UK, we have the FCA, the Financial Conduct Authority, and UK are actually banned from owning any form of ETFs. So the only real exposure at the beginning was owning MicroStrategy in August 2020. So for me, that was the avenue, so we bought. So anyone that would have had NASDAQ exposure, tech exposure, it all went into MicroStrategy, which obviously contributed to the premium. But the FCA being so harsh against Bitcoin, and no access to ETFs, allows investors to own essentially a derivative of Bitcoin that levers up on debt and does ATM debt dilution. So I'd say ignorance really makes it a really bad situation.
Yeah, and I think one other bold prediction on top of that of what the UK has done is I think we'll also get to a point, if not in the next year, hopefully in the next 2, where everyday retail users can have Bitcoin sitting in a wallet, click once, and all of a sudden start earning passive income. Yeah. We've seen a lot of that in the Stacks ecosystem with our asset SBTC, and the ability to earn a passive income off your Bitcoin with one click. I think we're going to see that in waves, that you're going to be able to even get into a diversified portfolio. So say you have one BTC, you click auto, and all of a sudden it's divided in 4 different strategies automatically for you. We're seeing the beginning of those rising funds right now, where some of your Bitcoin will go into staking, some of it will go into core yields, some of it will go into other areas, and we'll continue to see that rise.
I think when looking, maybe not the 2028 halving, but the one after that as well, I mean, there's 3 ways that you can make security sustainable. You can inflate the token more, you can increase fees, or you can create more demand for the reward asset for the miners or the validators. One's definitely not going to happen for Bitcoin. It completely destroys the value proposition of 21 million Bitcoin. 2, it's dependent on the ability to have more expressivity natively on the Bitcoin network. So what can you start doing now is you increase demand for Bitcoin. And that's providing more use cases for it beyond store of value and send and receive. But if you're not actively doing 2 or 3 right now, then you do get into kind of a worrisome situation, maybe more into 2032 or beyond, because you're not going to be able to pay for the security that you demand so much as a Bitcoin holder.
I think the next 3 years are going to be fascinating. We're seeing this pick up in adoption. I think most companies out there, they're not asking themselves why they shouldn't have at least a 2% allocation of their capital into Bitcoin. They probably should. The downside, if it's a small allocation, the downside risk is fairly low, the upside risk is huge, the potential is huge. So most institutions out there are and should be asking themselves the question, am I willing to put a couple of % allocated to Bitcoin? But then against that, you've got regulatory uncertainty. So right now in the US, we're in a very positive regulatory cycle. In the UK, you mentioned it yourself, it's quite negative. Europe is going in a similar direction with MiCA and whatever else. So that could very easily shift. And in the industry itself, I think you're seeing some consolidation. The players that have been around for a while, the big guys, Tether, for example, is pretty clear that they're dominating the stablecoin front. I mean, there isn't room for 50 stablecoins. You can only have a few. So I think you're going to see consolidation. But within that underlying theme, a lot of what I'm hearing, particularly I was recently in Circuit 2049, is there's a lot of interest in derivatives. Everybody's looking at derivatives, everybody's looking at how to create that leverage exposure. And there is a room for derivatives in financial services, but when you have already an industry that's a little bit, still in its infancy, maturing, and therefore the prices are volatile, and you throw derivatives at it, I see a world where there's huge risk that in the next couple of years, we have another FTX. Somebody's balance sheet will blow up, right? And that is going to cause the next crypto winter. So I see that there's huge amounts of positive upside in terms of directional travel. Regulators are still nervous. If somebody's balance sheet blows up, things are going to get harder before they get better. And then the next Bitcoin wave, which will happen after the next halving and we start off on another cycle, will probably be the biggest Bitcoin wave of them all. But I think we're going to see some pain before we see that.
But one thing we haven't mentioned is what was announced last week in the United States is the openness for banks to begin offering custodial services around crypto assets, and Bitcoin was mentioned in that. And then you had two major holding companies that came out, one this week, one about 2 weeks ago, 21, that opened and showed the amount of demand looking at Bitcoin as something they want to hold and earn off of. And so I think you also have in that prediction into the next halving is if this banking infrastructure change takes place and we see this demand continue to only increase as we're seeing on a week by week, almost day by day basis globally, we could be in a completely different world. If every single financial institution is able to custody Bitcoin, Ethereum, and stable coins, and then that may open up alternative assets as well, that changes the game on everything that we're talking about right now.
I mean, don't get me wrong, you're spot on. That's the bull case.
Yes.
In that bull case, if you add banks opening up to custodians, more derivatives, and still learning on risk management practices, I do see risk that I think it'd be naive for those of us who've been in Bitcoin for a while to not think of the cycles. After every boom, there's a bit of a bust. We should be asking ourselves, what will cause the next crypto winter? And if we can mitigate that risk, then it won't happen. But if we pretend that the risk isn't there, chances are it might come about, and that is one of the risks that I see. So I'm hugely excited, just as much as you are, but I think there's an element of caution that there might be some pain to be taken before the next bull run.
Thank you very much.